We had a very strong financial year, a pleasing set of results for our 2013 year ended September. On 11% revenue growth, we managed to grow operating profit 18% to 3.5 billion rand. Our profit before exceptional items was up some 20% year on year. And pleasingly, our cash performance was very good. We generated 4.3 billion rand cash from operations this year, compared to 43 million rand utilized last year. On an overall basis, our headline earnings per share was up 26%, and the board declared a dividend 26.5% up on the 2012 comparative. In the equipment division, first dealing with Southern Africa, it was a pleasing performance for the period, considering the difficult mining environment that we faced. So we grew both revenues and operating profit in the period. And that was bolstered to some extent by the Bucyrus Southern Africa acquisition, which closed in July 2012, but we benefited in the 2013 period from the revenues and operating profits, which exceeded our expectation. Our aftermarket revenues in the Southern Africa business were also relatively strong, and that added to our operating margin and our revenue growth in the period. Moving on to Iberia, the Spanish economy remained very challenging and very difficult, and again revenues were constrained in that environment. However, it was very pleasing to see that there was a substantial turnaround in our operating profits in the period. We incurred a substantial loss last year, exacerbated by restructuring costs which didn't recur this period, and we came very close to achieving a break-even result in Iberia in 2013. Moving on to our Russian equipment business, again a very solid result with revenues and operating profits slightly ahead of the prior year in dollar terms. Converted to rand, we got the benefit of some rand depreciation, which delivered a strong result in rand terms at the operating profit level. We continued with a pleasing operating margin in Russia, again through strong product support revenues, and we've seen an excess of 30% compound growth in our product support revenues since 2005. The Automotive and Logistics division produced a sterling performance in the period. On 17% revenue growth, they delivered a 28% improvement in operating profit and also saw some overall margin expansion. I think the particularly pleasing aspect of this year's results was that all business segments within auto logistics produced very well. Car rental performance was very strong, Avis Fleet Services, motor retail, as well as the logistics division. On fairly muted growth in new vehicle sales in South Africa, we saw 20% growth in our motor retail operating profits, while car rental delivered both increases in volumes and a slight increase in rate per day. Our fleet services business benefited from the recently awarded contract with the City of Johannesburg, as well as some other organic growth that we experienced in the period, both on financed and maintenance fleets under management. The logistics business, following the Manline acquisition earlier in the period, produced a sterling performance close on 40% up in operating profit growth. And in particular, we addressed some of the underperforming areas in our international operations, which should benefit our trading results in the year ahead. In terms of our outlook going forward, in the equipment division in Southern Africa and Russia, we do expect things to remain challenging in the mining environment as global mining companies continue to cut back on their capital expenditure requirements. However, we are seeing some increase in construction activity levels in the Southern African region, and we expect that to continue into 2014. And of course, our power systems business in Southern Africa and Iberia and Russia is performing well, and we expect continued growth in that business in the year ahead. Our handling operations should see some recovery in the agriculture business in particular. And if I move on to the automotive and logistics side, we're really expecting solid growth in the year ahead. Fairly stable growth in vehicle demand across Southern Africa and also in Australia, with some relatively good growth coming in our fleet services business as we continue to win new contracts and implement those contracts won in the past year. So overall for 2014 we expect to build on the past year's performance and make further progress in the year ahead.